Chad Peters. I'm president and CEO of Ridgeline Minerals. Ridgeline is a Nevada-focused hybrid explorer with 3 deals with 2 major companies, totaling $60 million across 3 of our projects as earn-in agreements. We also have a portfolio of 100% owned early-stage exploration assets that we are advancing 100% ourselves. And we have exposure to gold, copper, silver, lead, and zinc.
Chad, good to see you. We are catching a little bit later than thought. We were going to see each other at Beaver Creek, but the wildfires had other ideas.
Yeah.
So I assume everything and everyone is okay, are they?
Yep, everyone's good.
Good. Well, the reason I was excited to see is we talked back in August and I was kind of intrigued by the business model, and that works. And I want to talk about that in a second. But I guess the big news you put out at the time was some super high grade copper and gold numbers out of your own project, Big Blue. I mean, can you give me some update on that? How's that going?
Yeah, we've been advancing Big Blue pretty aggressively this year, at least on I guess you could say, preparing for a maiden drill program. So we've been heavily rock chipping the project, mapping. As you mentioned, we had up to 4% copper and up to 16 grams per ton gold in the same sample with visible gold in stockwork quartz veins, which is what you'd kind of see directly above the upper expressions of a porphyry system. And on top of that, we just did an IP survey that we announced results in early September. And that is showing that in both of the target areas where we're seeing these very high grade copper and gold, we're also seeing a very nice coincident chargeability anomaly directly beneath that. That suggests there may be a porphyry source to that mineralization that we see at surface.
Right. Okay. And I guess the idea is that people can advance and progress that, but the market sometimes has other ideas, which hence why I kind of like the business model. Now, I guess the most recent of which, in terms of that model of yours, is the South 32 earn-in. Are they actually spending money? Because quite often small companies sign these deals and then the big companies don't really do anything about it. They take their time. What are South 32 doing for you?
Yeah, so we signed that it's a $20 million US deal for South 32 to earn up to 20% or 80%, apologies, in which Ridgeline, if they execute on that deal, Ridgeline would retain a 20% non-dilutive free carry all the way to commercial production. So that's a really important thing to point out. In our business model, all of our deals with majors all have non-dilutive free carries all the way to production, either 20 or 25%. So that's a really key part for us, is having that long-term exposure where we can't be diluted out of our own discoveries. But what gets me excited about this deal with South 32 is we're actually the operators. So not only are we taking an operator fee of 10% for every dollar spent on the project, but it's also allowing us to really keep the pedal down on exploration. South 32 is excited. We're spending almost $400,000 just this fall alone on a geophysics program, an MT geophysics survey that will start in 2 weeks. And that's going to hopefully be identifying deep sulfide bodies at depth in our chinchilla sulfide target area. So lots of money being spent by South 32. NGM at our Swift project, that's another one of our earn-ins. They're spending about $3 million on deep drilling there right now. Actually, we're just finishing up the first hole of 3. So you're going to see about $3.5 million alone being spent on our projects just in Q4 of this year alone. So all fully funded by our partners.
Right. Okay. Which I guess keeps the wolf from the door in the sense that you're getting your management fee, you're keeping busy, you're advancing your own projects using someone else's dime. All good news. For your own projects, your own 100% owned projects, does that mean that they take a little back seat for now?
Well, I'd say we're trying to be really strategic on how we advance them, right? Every one of our early stage projects, we always do a first phase drill program. So I will not option a project to someone without first doing a first pass. We pick up every project with the assumption that we're going to make that discovery ourselves, right? And then somewhere along the way, something comes up, right? Whether it's access to capital, the risk of drilling deep holes, whatever factor that ends up coming up where we say, you know what, maybe it's time to partner this project. That's what we assess as we explore the project. But it always gets that first pass program, and Big Blue is no different. So we're going to be drilling that project hopefully in, I'd say, the first half of 2025. We're trying to make sure that we first support our initiatives at the Selena project, right? Make sure that that's teed up and ready to drill with South 32 in the spring as well. But as soon as that is taken care of through Christmas, then we can start focusing again on Big Blue.
Right. Okay. And it's fair enough. I don't have a problem with that. I just want to try and understand it because, sometimes people get a little bit distracted and there's almost too many moving parts, and they're not kind of focused. Obviously, South 32, it's a big number, $20 million, but what's the kind of breakdown in terms of the spend over time and what the expectation is after each of that those triggers are pulled?
Yep.
Yeah,
Yep.
milestones.
So they have to spend $2 million in the U.S. in all the dollars are in U.S. dollars, $2 million U.S. in the first 2 years of exploration, followed by in the initial 5-year period, they have to spend a minimum of $10 million to earn a 60% initial interest. At that point, they can choose to take over as operator, or they can elect for us to stay operator and spend an additional $10 million to earn 80%. When that full 20 million is spent, they would immediately get their 80%, and it automatically triggers a 20% non-dilutive debt facility that we can then draw upon all the way through commercial production to fund our portion of any future exploration or mine development that would occur on the project. So essentially, we never have to, issue a share, take out a loan to support that project all the way through to commercial production. And if we own 20% of like the last major, the mine that they're putting into production right now is the Taylor deposit, which is, a world-class CRD. They bought it for $2 billion in 2018, right? So if we own 20% of what we hope is maybe a Taylor 2.0 type of scenario with Selena, it's an incredibly valuable proposition for the company. Yeah.
It really is. And obviously, South 32 concerned, it would need to have that kind of scale to be interesting. So if you get to that point, it's great. In terms of, how does it actually work in terms of, they obviously have a lot of say as to what you do, how you go about it, but so do you, one presumes.
Well, it's actually been a pretty good. It's been pretty collaborative so far. So the great thing is when they came in, they said, "Look, you guys have done a great job. You made this discovery. It does appear to be significant. They trust the work that we're doing, and they said, "Look, we just understand you're lacking funding. So you tell us where you think we need to be drilling, what the priorities are." They've come in and taken their experience at Taylor, and they've helped apply some of their successes that they've had there in their exploration, and said, "Look, let's do the MT survey first, then we'll do a maiden drill program based off that." So I think we're all working pretty closely together on kind of our institutional knowledge of the project, as well as their bigger picture knowledge of how CRD systems tend to form. So it's been a really good partnership, and I feel like everybody's pretty aligned. So it's been really great.
Right. And so just for the great unwashed and uninitiated like myself, these kind of polymetallic structures, obviously, they're excited about it. You might be excited about it, but the market generally gets a little bit confused when polymetallics get discussed. So, what are the components by which we judge this, by which we judge success and perhaps even value?
Yeah, no, for sure. Like, that's the tough thing is I actually really struggled just for Ridgeline. We made this discovery at Selena. We really struggled to get people excited about the potential there, right? We started reporting in silver equivalents just to kind of say like, hey, if this were silver equivalent, you'd be pretty excited. But what you're looking for in a CRD is, like, for example, the Taylor deposit is around 150 million tons of, don't quote me exactly on this, but I think it's around 80 grams per ton silver and about 6% lead zinc combined. And there's a little bit of copper in some of their discovery there as they drill deeper. So that's relatively low grade when you think about it, right? Now they have much higher grades than that, but that is their representative overall grade of that deposit. Selena, our best intercept was 6 meters of 480 grams silver and 18% lead zinc combined. Plus we have about 0.1, 0.2 grams per ton gold in there. Guess we're in Nevada, so we get that gold kicker. But so there's no question that the grade is there. On average, we're drilling intercepts that fall into that general range, 200 to 400 grams silver, 5 to 15 grams per ton lead zinc combined, and percent, sorry, not grams. And so we know the grade's there. And like you said, South 32 isn't interested in looking for small things. So they believe the scale potential is there as well. And that's what we'll be testing with the first program.
Right. Okay. And again, just sticking with, how do I value these things and sure. what am I buying into more importantly, right? Okay. Yep. South 32, big balance sheet, lots of projects all the way around the world and scale is important to them. So once they've kind of spent this $20 million over the time frame, are you off the hook, or would you need to have hit very specific goals for them before they kind of step in and take over?
That's a tough question to answer because I'm not sure what their interest level is in running, where their tipping point is for running the project. We haven't had that discussion yet, although I hope we do get to that point someday. But my assumption is we're going to get through phase one, $10 million. And I would believe I think 10 million is more than enough to prove, is this a material discovery of South 32 size or not? And if we hit that milestone, I think they'll take over exploration. That'd be my guess. But that's the idea. And like I said, if they hit the full 20 million in spending, that we have the automatic debt facility, right? So we don't have to. We're on the hook for the 20% that would carry on past that, right? Let's say you're spending 10 million. After that, well, then we would be on the hook for $2 million. The difference being we can then go draw from that debt facility at prime plus 3%, which is an interest rate that you'll never be able to get a junior, just going to a bank. We draw on that. We fund our portion of the debt of the expiration, and on commercial production, we recoup those. We recoup that loan, or South 32 would recoup that loan off of commercial.
Right.
production.
Okay. Yeah. And again, just think, because I know the contract's pretty tight. It's pretty good. Let's say you kind of get to the point where they do take over the exploration. These types of CRD deposits that you're looking for and chasing for. I mean, what's the sort of comparable project, or can you give us some sort of some look into some of the peers? How much more exploration monies have they, and meters have they had to drill to kind of get to a point where they can understand that they've got the scale that they need to move on? And then I guess there's no necessarily any guarantees that they won't just sort of park it up, and depending on what else is going on in their portfolio, so that there's a kind of potential waiting period there. Yeah. So how do you play that?
Yeah, there's always, that's the thing, when you're partnering with major companies, there's always that risk, right? If they meet their minimum spends and now they are the majority owners of a project, but maybe it doesn't reach that hurdle rate for them, the project can get shelved. And we don't have a mechanism in place for us to claw that back. That being said, in my experience with both Nevada Gold Mines and South 32, they've been very, very clear that what we've done is we've always made sure that the initial spend is more than enough to test the initial concept. If that initial concept proves up, they're going to run with it, right? And if it doesn't, they're dropping it. So we've kind of made it that very much like where, we force them to put the money in the ground early. It allows them to take a really hard look at a project in the early days. And if it's not, call it South 32 size, the idea is they walk before they earn that minority interest, because they also don't want to be bogged down in a JV that's shelved, and like it's an administrative nightmare for them as well, right? So we try to be really aggressive with their deals. Money goes in the ground early. If a discovery is made, hopefully it's of significant scale and they move forward.
Right. And what happens if they get to spend the 10 million, get to 50%, and they decide to walk? Does it all revert back to you, or do they still
if
get
they
to hold on to it?
They can spend 9.95 million and give it back, and we'd get 100%. They spend 10. They own 60%, and they can do what they want with it. At that point, it's their project, right? They own 60%. Now, I think we all know that if it comes to that point and they go, you know what, this isn't exciting for us, we're not going to put money into it, we can reach out and say, look, we want this project back. We think it's reasonable, good size, and we want to carry it forward. And there's always that opportunity to have that discussion.
Yeah, and I think it's an interesting one. What is a good size for them doesn't necessarily mean it's not a good size for someone else. It still works. The economics can still work. Okay, it's always interesting, that dynamic between working with big balance sheets initially, because it certainly, as you say, and you're doing it. You're getting the drilling done. You're working out what's there. It's sort of further down the line at what those conversations look like. But I think there's a level of pragmatism even with the big guys with these things. Right. Okay. So, well, there we go. That's one. You've got more than that going on. Who else is spending what?
Yeah, so we have Nevada Gold Mines is spending $3 million at our Swift project, which they've already spent 7.5 million US over the last 3 years. So they're going to be rated about $10 million by the end of this year, which is half of the required expenditures for them to meet their minimum earn-in. They have to spend 20 million by September of 2026, or we get 100% of the project back. So that is a really hefty spend on that project. They're drilling deep holes. Every hole they've drilled has intersected pretty meaningful, low grade but wide gold intercept, showing there's a very large gold system at Swift. The question is now what we're doing this year is we are actually kind of trying to now vector in on the higher grade core of the system. The first hole is complete off to the lab. And there's some encouraging, we're encouraged by what we're seeing. We're still continuing to see the right kind of Carlin type alteration that we need to see to host deposits here in Nevada. So yeah, no, I'm hopeful that that's going to return some decent results for us this year. And yeah, that's one of the projects. Then we have our Black Ridge projects also being explored by Nevada Gold Mines. That's on the Carlin trend. They're doing prospect generation and kind of getting that project ready, permitting ready for a maiden drill program next year. So that's what I really like about this model, right? Not only are we moving projects like Big Blue, which we own 100% of, forward ourselves, we're just seeing every one of these projects is starting to fire now. And it took a while to get up and going. And I think that was part of the issue is we were in a tough market even for the majors the last couple of years, right? Money was still tight. Exploration dollars were still tight even for major companies. So we're starting to see that kind of free up a little bit. I'm seeing a very aggressive attitude at both South 32, NGM. They all want to see discoveries get made heading into what looks like a pretty exciting market. So I think that over the next, call it 12 to 18 months, we're going to be seeing, well over $10 million being spent on across our projects, all fully funded.
Yeah, it was pretty interesting actually when I was down in Colorado Springs talking to some of these producers. They were freeing up capital for additional exploration drilling, by 40, 50, 60% type levels. It wasn't.
Oh yeah.
It wasn't a little bit. They were
No.
they knew what having this additional free cash flow meant for them and their bottom line. Interesting indeed. So for you guys, right? You're the money being spent on your assets, and they're all slightly different profiles. But I guess you must be super excited about Big Blue, because that in terms of it's just very different from the other two. I think. So how do you put yourself in a position to get after that? Because you've got different stories going on here, and people need to understand them. Analysts have got to understand it. Your retail have got to understand it, and maybe future partners have got to understand it. But you've also got to get credit for it. And you've got to kind of drive that share price. And I think all this new money coming from producers into JVs and M&A and mergers of equals and however the hell they want to frame these things, it's not going to kind of come cascading down through the sector very quickly. It'll get there, but it's not going to very quickly, except where models like yours, where perhaps people may allocate the capital a little bit more quickly than perhaps your agreement says. So how do you take advantage of that to be able to get after what you want to get after, which is Big Blue? Because those grades and the early work suggests you could be on something quite nice there.
Yeah, that's why we were actually, it actually worked out perfectly, because as we were kind of finalizing the deal with South 32 at Selena, which was our flagship asset, right? Like that, some people look at it and go, well, wait a sec, that was your flagship. Why'd you get rid of it? And the reason we were willing to get rid of it is we understood, okay, we need to see $10, $15 million going in the ground at Selena. And I am very excited, and our team's very excited about that potential at Big Blue. It's shallower than Selena, right? We're talking 400 to 500 meter to top a target instead of 7 or 8 for Selena. And on top of that, the grades are fantastic, and it's a bit easier of a story to tell. We're talking about a copper gold porphyry. That's as tale as old as time, right? Kind of thing. Like that's something that's easy to tell. You drill a good hole at Big Blue, every single investor looking at that knows exactly the potential of what you're looking at. I drill a great hole, which we've already done at Selena, and I had people saying, what's that in gold equivalent? And I'm like, well, that's 6 meters of 13 grams. And they go, damn, that's good, right? But that's not, but so if someone has to ask, is this good? That's not necessarily a project that I want to be putting very hard to get dollars into the ground on, right? I want to be drilling holes into projects where the upside is massive, the cost is relatively low to test, and it's a very simple story to tell. And that's exactly what Big Blue is. So we're talking about essentially a grassroots exploration story that has 3 historic mines on the project, right? That haven't been explored for, I think, around 90 years now, right? So actually more than that, 100 years. So you're talking about no modern exploration, 1 drill hole that did not test the target. And and just incredible upside. So that's why I'm excited about Big Blue.
No, you should be excited, but it does come back to that thing of it's kind of grassroots, etc. And you're going through the early phases, the important stuff for the setup. But at the same time, the market only really kind of understands if you get a drill hole in there. Now, cash is tight. You don't want to be spending money in a market like this where last 2-3 years, I think explorer codes have not been getting the response that they want from good drill holes. So, what do you think you need to do? Is it bide your time, be patient, and therefore you'd ask that of your shareholders and anyone looking at the potential of this? Or do you think you try and rustle up enough money for one good hole?
One hole makes me really
easy
nervous,
to find.
But
Easy to
find.
find.
I'd like to say 3 to 5 holes is certainly within our what we could do. What I want to do is I would love, we're seeing a lot of money going in the ground this fall. I would like to use hopefully some catalysts from other projects, such as Swift or Selena, to hopefully get a little momentum in the stock and use that to raise some capital that would then be put into our 100% owned projects, right? So that's kind of the strategy. We are not in a huge rush to go. We don't have to raise capital anytime soon. Like I said, our burn's incredibly low and we're making money off of our South 32 deals. So we can bide our time, be really strategic, hopefully use a catalyst that's going to move the stock a little bit to raise some capital. And we're also assessing, there's a lot of strategic, what I'm noticing, and I think you mentioned it previously, the majors are starting to allocate capital. What I'm seeing is 2 years ago, you talk to a corporate development group and they say, we don't do strategic investments, right? We'll only do project level JVs. And even then it's going to, really bend you over a barrel. Now we're starting to see that kind of open up and those same groups are kind of coming back and saying, you know what, we're now interested in doing strategics, taking 10%. That's an interesting way, in my opinion, to potentially fund exploration, right? It's a little less dilutive. Typically, you can get a premium on that. And, a lot of times you can do it without warrants as well and lock up the shares. So, we're assessing kind of every different strategy here to try to fund the company. But the end goal is we want to get at least 3 to 5 holes into Big Blue and sooner than later.
Yeah, okay. Now, but if I do look at your share register, I'm seeing Rick Rule in there and he always talks about going after projects which have scale. That's his mantra. He's not going to mess around with small explore codes. So, yeah, and obviously because Stevens Investment Management, you've got Merck Investments, you've got EMX Royalties in there as well. These are good people. They see something. So again, just to maybe help people who perhaps don't know the story so well. So what is it that they have bought into that you've told them about?
I think there's 2 primary things that have attracted most of our core shareholders. The first is that we are not regurgitating old projects, right? We're not going in and taking a 200,000 ounce oxide gold play and seeing if we can turn it into 4. No one cares about that, right? It doesn't get anyone's motor running unless you're at $3,000 gold. What we're trying to do is we're identifying projects of scale that could be like if they're right, they could be tier 1 discoveries in their various commodities. That's why we have multiple majors coming in with us. So the scale question, I think we answered. The other thing that I think a lot of these groups like is the fact that we are trying to minimize our risk, right? At the end of the day, I try to run Ridgeline like a business. And to run it like a business, it means minimize your risk wherever you can. We're in one of the riskiest probably businesses that you can get into, right? It's very binary. Either the hole hits or it doesn't. And I'd rather have somebody funding that discovery, right? If we can. So we're trying to find that mix. So I think between those 2 things, that's what's really brought in the Rick Rules, the Paul Stevens into the company. And I hope they stay in the company too. Hopefully we keep on impressing them. So
okay, well, Chad, I appreciate the catch up. Sorry I didn't catch you in Colorado. Maybe next time, huh? Keep doing what you're doing. Love the story.
Appreciate it.